Hi, this is Parker Couch with Homestar Financial, and I'm here today to talk about reverse mortgages. If you've been thinking that now is the time to get a reverse mortgage for yourself, or if you have any questions about the reverse mortgage option for your parents, then you want to watch this video closely. Reverse mortgages are a type of real estate financing, but they work differently from all other home loans. A reverse mortgage lets you borrow money from the equity in your house without any monthly payments on a home loan. Now, you still have to pay for your property taxes and pay for your homeowner's insurance, but the mortgage is repaid when the house is sold or when the property owner passes away. Many of the rules and standards associated with most home loans simply don't apply to reverse mortgages. So let's look at the basic requirements of a reverse mortgage. The first and most important requirement is that you can only get a Federal Housing Administration FHA reverse mortgage if you're 62 years or older. Nearly all reverse mortgages are insured through the Federal Housing Administration. The FHA calls reverse mortgages home equity conversion mortgages, or HECMs. You largely qualify for a reverse mortgage on the basis of the equity in your home, and the amount you can borrow on a reverse mortgage will depend on the borrower's age, the interest rate, and whether the rate is fixed or adjustable, as well as the property's value. Monthly payments for principal and interest are not required, and the borrowers are required to pay only the property taxes and the homeowner's insurance. The loan is repaid when the borrower moves, sells the property, or passes away. An FHA-backed HECM is a non-recourse loan, so the loan is secured by the property's value, not the borrower's assets. So what's the qualification requirement for a reverse mortgage? Well, the amount that will be available for withdrawal on an HECM loan or reverse mortgage will vary by the borrower and depends on the following. 1, the age of the youngest borrower or eligible non-borrowing spouse. 2, current interest rate. And 3, the lesser of the appraised value or the HECM FHA mortgage limit or the sales price. And if there's more than one borrower and no eligible non-borrowing spouse, the age of the youngest borrower is used to determine the amount you can borrow. You can use an HECM to purchase a primary residence if you're able to use cash on hand to pay the difference between the HECM proceeds and the sales price plus closing costs for the property that you're buying. And there are financial requirements with the reverse mortgage, but they're not as stringent as a standard mortgage. Your lender will verify your income, your assets, your monthly living expenses, and credit history. They will also verify that you have made timely payments on your property. Also, property taxes, hazard, and flood insurance premiums will be verified. You can pay for most of the costs of an HCM by financing them and having them paid from the proceeds of the loan. Financing the costs means that you do not have to pay for them out of your pocket. And the HECM loan includes several fees and charges, including mortgage insurance premiums, both an initial and annual premium, third-party charges, origination fees, interest and servicing fees. Your lender's really going to need to discuss which fees and charges are mandatory. A reverse mortgage is a form of debt that grows every month. So how do you actually pay it off? First, a reverse mortgage only needs to be repaid when one of these things happens. 1, the property is sold. 2, the borrower moves away. 3, the borrower has passed away. But what if the remaining loan balance is more than the value of the property? Well, an FHA-backed reverse mortgage is a non-recourse financing. What this means is that the debt is secured by the value of the home and nothing else. If the value of the property is not sufficient to repay the debt, then the difference is going to be paid by the FHA insurance program, not you or your heirs. And if you're considering that reverse mortgage, your first step needs to be to speak with a mortgage professional like myself that can help you understand a reverse mortgage and decide if this is actually a good option for you. Thank you so much for watching. This is Parker Couch with Homestar Financial. You can connect with me at parker.couch@homestarfc.com, or you can call or text me at 770-540-4936. Thanks again for watching.